Hello everyone, PS from PS Invest Plays here today. Since March 2020, Amazon stock has doubled in price. The knee-jerk response to Amazon's second quarter revenue miss is understandable, but perhaps overdone. In 2021, Amazon stock has lagged S&P 500. Its stock is up only 5% versus S&P 500, which is up 18%. Is this trend going to continue? Or we can expect higher stock price in 2021 and beyond? In this video, we will understand its business, its financials, its future outlook, and review its charts using Elliot wave to see how we can make money. So stick around. I think you'll like what I have in store for you today. Amazon, ticker AMZN. Amazon is an American multinational conglomerate which focuses on e-commerce, cloud computing, digital streaming, and artificial intelligence. Amazon is known for its disruption of well-established industries through technological innovation and mass scale. It's the world's largest online marketplace, AI assistant provider, live streaming platform, and cloud computing platform as measured by revenue and market capitalization. Amazon is the largest internet company by revenue in the world. The knee-jerk reaction to Amazon's second quarter revenue miss is overdone. Operating cash flow improved 16% year over year for the 3-month stretch ending in June, on the heels of a 27% increase in profits of $15.12 per share. This was still a far better figure than the $10.30 per share reported for the same quarter a year earlier. Forecasted sales growth of between 10% and 16% for the quarter currently underway marks a clear slowdown. But consider the circumstances. In the third quarter of last year, online shopping in many ways was the only real shopping option for many. It's a tough comp. This is still Amazon, which was growing well before 2020 closures took hold, and will continue to grow even when the closures are put into the rearview mirror. Investors don't care, or at least didn't seem to care in early August when they were still selling the stock in earnest, driving it more than 15% lower from peak to trough. This bearishness was likely more a function of overhyped expectations than of secular weakness in Amazon's business model. Estimates for 2021 seems to have rushed ahead of what was reasonable in a post-2020 closure environment, and Amazon's stock's sell-off was probably justified. Now, with expectations reset and shares still nearly 10% off all-time highs, Amazon has the green light to start climbing from here once again. As more consumers shift their purchasing behavior online, the share of e-commerce is forecasted to reach 22% by 2023 and 18% in 2020. I believe that Amazon's well-established market position with a massive Prime membership base, 142.5 million members, or roughly 43% of the US population, as loyal customers and solid logistics and shipping network, providing it with an advantage as seen with the rise of its e-commerce marketplace with third-party sellers, 9.7 million sellers worldwide across the US, UK, Germany, and Japan. Its market leadership is quite extensive across different product categories and markets as illustrated in the table to the left. Its consumer and consumer electronics sales is the largest product category, accounting for 50% of the product's total e-commerce sales in the US and 26.7% of total retail sales. This is followed by apparel and accessories, books, music and video, and furniture and home furnishings, which is 32%, 83%, and 34% of e-commerce sales. AWS revenues grew strongly at 29.5% in 2020, with a market share of 31.8% of the cloud infrastructure market. The rapid growth of the cloud infrastructure market is underpinned by the rising volume of global data volume creation at a CAGR of 23% until 2025, as data volume is projected to grow to more than 180 zettabytes as the world becomes more data-driven, with the rise of data analytics, 5G, and Internet of Things, IoT, spurring the growth of data creation. While AWS only makes up 11% of its total revenues, its superior margins of 29% compared to only 2.8% for the other company segments has AWS accounting for 58% of operating income in 2020. It is worth noting that AWS is also well shielded from any impact of the closures. Amazon is investing significantly in its logistics division, and I expect them to compete with the behemoths, FedEx and UPS. Amazon has 40,000 semi-trucks in its growing fleet. The US logistics market generated $1.6 trillion in 2018 and is still growing as there is a huge demand for online deliveries. Amazon's logistics division is worth $310 billion today, with the potential to be worth over $1 trillion by 2031. In August, Amazon announced that it will begin allowing customers to choose Affirm service, buy now and pay later, as a payment option during checkout. This is an incremental positive for Amazon. It will be able to offer customers who spend $50 or more an alternative to paying upfront in cash, buying with a credit card, or paying interest on their purchases. Short-term Affirm payment options don't charge interest. Instead, customers can simply pay for larger purchases through an installment plan with Affirm. This new payment option may increase spending at Amazon. Amazon is in the works to launch new point-of-sale technology in its supermarkets and bookstores. Going a step further, this hardware and software would be integrated into third-party businesses as well. This new innovation would be implemented in congruence with the company's delivery channels and its new palm scanning payment system, Amazon One. Once incorporated by small and medium-sized businesses, the tech could compete with other point-of-sale firms like Square and PayPal. Looking at the financials for Amazon, revenue, gross profit, EBITDA, net income, EPS, earnings per share have increased considerably when you compare from 2020. In addition, if you compare the financials with 2019, they have increased by a very good clip. In the chart on the right, free cash flow, FCF, currently stands at $23.88 per share. The price to FCF ratio is in line with historical average. In the chart on the left, price to earnings ratio, PE, currently stands at 58.43. The PE ratio has been declining and EPS is increasing quarter over quarter, indicating that the stock is undervalued. While the accelerated growth eventually winds down, its growth outlook remains highly attractive as an established and dominant market leader in e-commerce, cloud, logistics business. The share of e-commerce sales as a percent of total retail sales is forecasted to keep marching higher, with the shift of consumers' buying behavior towards e-commerce with a forecasted rate of 22% by 2023. All in all, Amazon stock looks undervalued. This is also indicated in the charts, where I see the stock price to increase considerably in the next 4 to 6 years. Now, let's look at the charts for Amazon. If you like this video, please don't forget to subscribe hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Looking at the charts for Amazon, the bull wave that started in 2020 is still not over. It has completed its first two waves, with a caveat on wave 2 that if the price drops below $3,175, it would mean that wave 2 is still not over. At this point, I expect strong resistance to be around $3,094 and support to be around $2,800. This to me would be excellent buy range for Amazon for the long haul. If the price does not drop below $3,175, that would be an indication that wave 3, which is a bullish wave, has resumed. Wave 3 is typically 123.6% of waves 1 to 2, giving us a price target of $5,268.96. After this wave 3 is over, I expect a wave 4 pullback, which is 23.6% retracement of wave 3, giving us a price target of $4,295.99. After this pullback is over, I expect wave 5 to resume, which is typically an inverse 61.8% of waves 1 to 3, giving us a final target of $6,957.97, which translates into 108% profit in the next 4 to 6 years. Now, let's summarize. At its current price, I would recommend nibble pullbacks and accumulate any corrections. If the price drops below $3,175, then I expect strong resistance around $3,094 and support around $2,812. This would be an excellent buy range. I would recommend holding it for the next 4 to 6 years, as I expect a price target of $6,957.97, translating into a 108% profit for Amazon stock. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.